I'm Jane King at the NASDAQ market site. A TV star makes $12 million with one tweet.
Mannkind Corporation is back in focus as the struggling biotech looking for a buyer. And get ready for cash from your ATM using your smartphone. No more ATM cards may be convenient, but is it safe?
Welcome to Small Cap Nation. I'm Jane King at the NASDAQ market site in Times Square. You can now live stream your GoPro stunts directly to Periscope. Following an update to the Periscope app, you can now use a wide-angle, high-resolution GoPro Hero camera to broadcast live to the world. There are shots you can get with the GoPro that you can't get with the phone, like snowboarding or kayaking down a river. Well, Oprah Winfrey loves bread, and investors love Oprah. After the media mogul tweeted a video of herself proclaiming she lost 26 pounds on the Weight Watchers diet while eating bread every day, shares of the diet company rocketed 20%. And as a result, Winfrey, which owns 10% of Weight Watchers, earned $12 million. Well, U.S. Steel says 2016 probably won't improve much from last year. Last year was one of the worst for the steelmakers. U.S. Steel did post its third biggest quarterly loss on record. The steelmaker had a net loss of $999 million in the fourth quarter, compared with profit of $275 million a year ago. Steel prices plummeted 39% from a year earlier. U.S. Steel says it's facing significant headwinds still. Well, the payment processor Total Systems Services agreed to buy Vista Equity Partners TransFirst for about $2.3 billion to expand services to more than 235,000 small and medium-sized businesses. The all-cash deal will push TSYS to sixth place among so-called U.S. merchant acquirers by revenue. The combined company will serve more than 645,000 outlet payments companies as they are rushing to consolidate as consumers increasingly embrace electronic systems like credit cards and mobile phones rather than cash and checks. Well, lots of small cap companies making news today, so here's a look in today's small cap wrap. Arista Networks must turn over some of its findings related to its patent case against Cisco. Ethan Allen says revenue beat estimates. Fate Therapeutics says the FDA has cleared its Protamune IND application. Hawaiian Holdings sees capacity rising as fuel prices drop. Lynette says earnings per share will miss estimates. And also, SunEdison has yet to complete its $1.9 billion purchase of Vivint Solar, but it's already shopping some of the company's rooftop solar assets. Bloomberg says the Vivint deal capped a multi-billion-dollar spending spree that made SunEdison the biggest clean energy developer with wind and solar projects on 6 continents. But it also prompted investors to take a close look at the company's debt, which ballooned to almost $12 billion at the end of the third quarter. Now, the scrutiny helped drag down SunEdison's shares. Ameriquest, a financial services company, said that it will postpone its $74 million initial public offering due to volatile market conditions. The company was expected to price on Tuesday. Now, so far this year, no companies have gone public. Nordic Realty Trust is expected to price its initial public offering today. And after initially postponing the pricing, Shimmick Construction may price this week. Mannkind is back in the spotlight. Shares got a boost in the previous session. The company announced it was exploring its strategic options. There are reports of a potential sale in the works. Is there any substance to that speculation?
Hi, Jane. Mannkind shares are seeing a pop in midweek trade. Gains of over 20% brought the price back above $1. On Tuesday, the stock rallied over 22%. It has been choppy waters this week as well as this month. And now there are reports that Mannkind is working on strategic options, including a potential sale. The maker of inhalable insulin treatment, Afrezza, has struggled with disappointing sales. Mannkind recently lost the backing of Sanofi to market and distribute Afrezza. Share prices dipped approximately 50% on the termination of the contract. Now, the inhalable insulin is its only product and it has no sales or other distribution operations. Mannkind teamed up with Receptor Life Sciences in the wake of the Sanofi deal being terminated. Now, the company announced plans to develop novel inhaled therapeutic products. It plans to use its Technosphere system to deliver treatments using compounds that are owned by Receptor. Now, Receptor Life Sciences is an independent company, but little is known about it. Mannkind developed an FAQ page to address shareholders' questions about the newly formed company. It says Receptor Life Sciences is funded by prominent business leaders in the Seattle area. The investors chose not to disclose their involvement. And according to the Reuters report, unnamed sources say Mannkind is working with investment bankers for alternatives, including a sale of itself to a larger firm. Now, at this year's JPMorgan Healthcare Conference, Mannkind's CEO said the biotech has enough money to stay in business into the second half of next year.
There are analysts who don't expect Mannkind to sell itself, but why would the biotech need to consider the option?
There is plenty of speculation about the future of Mannkind. While some say that it could sell itself, there needs to be a suitable buyer. Meanwhile, others speculate that Mannkind's alternatives are hopeful, while some even see the firm headed towards bankruptcy. When it comes down to Afrezza sales, commercial success has been disappointing, and only time will tell if market viability can be turned around. The Technosphere utility could keep Mannkind in the game. It allows drug delivery into the bloodstream at a rapid pace. Now, given the deal with Receptor and Mannkind's statement that it could earn a milestone this year, there may be hope. The deal means the potential to earn royalties on successful products.
Biogen reported earnings this morning. Shares are seeing a strong gain after topping Wall Street expectations. And what's behind Biogen's performance?
Well, Biogen's fourth quarter sales and revenue beat estimates. We're seeing shares gain over 5% on Wednesday. The company's top drug had a record quarter. High demand for its multiple sclerosis drug, Tecfidera, boosted quarterly sales. Biogen posted a profit of $831.6 million, or $3.77 a share. That's down from $883.5 million, or $3.74 a share. Meanwhile, revenue spiked 7.5% to $2.84 billion, above forecasts. And after a lackluster performance during most of 2015, Biogen slashed 11% of its workforce in the previous quarter as part of its restructuring. As for company guidance, it met forecasts. And with today's gains, Biogen's market cap topped $58.8 billion.
Guys, I got the jerseys. El Nino.
Aquí.
Spray Dan.
Oh, yeah.
Don Ovan.
Think that's me?
You guy, it's $40. Can you cover that?
I'll send it to you right now. Done.
Okay, got it. So hat trick Rick, he's the best player on our team. You get the ball, you give it to him.
Great. Rick.
On your phone, online, on the go, Wells Fargo makes it easy to get banking done.
All right, Don, you're on. Nope, just kidding.
Doug, you've been staring at that for a while, huh? Listen, TD Ameritrade has former floor traders to help walk you through that complex trade, so you'll be confident enough to do what you want. I'll pull up your number. Blammo. Let's get those guys on the horn. Ooh. Looks like it is time to upgrade your phone, Douglas.
For all the confidence you need, TD Ameritrade. You got this.
Let's go, Serena. Fight, fight. Come on, fight. Can't stop me now. Come on, Serena. Can't stop me now. You don't want me. Can't mess with me.
Back to the top. Here we go. 2, 4, 5, 6. Whoa, stop. Let's go back. 1, 2. Whoa, we're going to stop there. I bet we can do it even better.
It took tennis legend Serena Williams, fencing champion Tim Morehouse, and the world-famous Rockettes years to master their craft. But it took them only moments to master paying bills at Chase.com, depositing checks at Chase ATMs, and transferring funds on the mobile app. Technology designed for you, so you can easily master the way you bank.
JPMorgan Chase announced it's upgrading ATMs in 2016. Its ATMs will offer the option for customers to get cash using a smartphone. How will this work exactly?
Chase customers will have the option to withdraw cash using their smartphones. The option will be known as cardless cash. Expect 2 phases to the rollout of the technology. Now customers can utilize the Chase mobile app to request an access code and enter the code at the ATM. Eventually, customers will be able to tap their mobile device onto the ATM and type a PIN onto the screen. The withdrawal limit will also be higher, with $3,000 the new sum. Cardless ATMs are not new. Its adoption and availability are still growing. Cash access using mobile banking apps have been cropping up across the nation. JPMorgan Chase shares are trading nearly flat on Wednesday. The financial sector is off about 0.25% on the session.
And how soon can customers take advantage of the option?
We'll expect Chase to introduce the option by the end of the year. The new cash machines will allow customers to pay Chase credit card bills and mortgages. And according to Chase, most ATMs will be getting new software to handle the transactions. Also expect future upgrades to allow for near-field wireless communication so customers can access their account info on their phones. Of course, customers can still use their ATM cards. The new smartphone withdrawal technology will just be a handy option.
Will there be other convenient upgrades to Chase ATMs?
Chase's monthly ATM transactions outpace the number of teller transactions in its branches. JPMorgan has been cutting costs, including staff, to boost profits. The bank aims to increase the number of teller transactions processed by ATMs to 90% from current rates of 60% by the end of this year. So it's a continued effort to move bank tellers from behind the counter onto the branch floor. With more transactions handled by ATMs versus tellers, it makes sense to have humans assisting customers on the floor versus handling routine transactions.
Guys, I got the jerseys. El Nino. Aquí. Spray Dan.
Oh, yeah.
Don Ovan.
Think that's me?
You guy. It's $40. Can you cover that?
I'll send it to you right now. Done.
Okay, got it. So hat-trick Rick, he's the best player on our team. You get the ball, you give it to him.
Great. Rick.
On your phone, online, on the go, Wells Fargo makes it easy to get banking done.
All right, Don, you're on. Nope, just kidding.
Doug, you've been staring at that for a while, huh? Listen, TD Ameritrade has former floor traders to help walk you through that complex trade, so you'll be confident enough to do what you want. I'll pull up their number. Blammo. Let's get those guys on the horn. Ooh. Looks like it is time to upgrade your phone, Douglas.
For all the confidence you need, TD Ameritrade. You got this.
Let's go, Serena. Fight, fight. Come on, fight. Stay low. Come on, Serena.
Back to the top. Here we go. 2, 3, 4, 5, 6. Whoa, stop. Let's go back. 1, 2. Whoa, we're gonna stop there. I bet we can do it even better.
It took tennis legend Serena Williams, fencing champion Tim Morehouse, and the world-famous Rockettes years to master their craft. But it took them only moments to master paying bills at Chase.com, depositing checks at Chase ATMs, and transferring funds on the mobile app. Technology designed for you, so you can easily master the way you bank.
The firm was started by my partner, who is one of the original fintech people. My partner Andrew developed the largest hedge fund database in the world. And we're using a lot of that technology and frankly a lot of that playbook and applying it to the family office space.
Okay.
So he started his own family office in 2006, and we officially launched the firm about 3 years ago.
Now, what is a family office?
So a family office is a family that's made a substantial amount of money, usually a minimum of $100 million, and they have created enough wealth where they need to start thinking about how they can deploy it outside of the sector that they made the original capital in. So either they'll use outside advisors, or they'll bring in their own financial team and look for kind of unique alpha generating opportunities that allow them to divest from their core business.
Okay, so the purpose is really to diversify a little bit their wealth and to make sure they're not totally exposed to one area, whether it's technology or biotech
Right.
or whatever.
Or real estate.
Or real estate.
Whatever it might be. That's one purpose. And another purpose is to come together with like-minded individuals, especially from a deal flow perspective. One of the ways we break up our national network of family offices is we have regional family office associations in almost every money center around the country. And the reason we do that is, so for instance, in New York, about 65% of the families are associated or have generated their wealth from real estate.
Okay.
And so there's a great opportunity for them to come together and share deal flow. And that really can actually enhance their core business. So that's another reason.
Okay, so it makes a lot of sense. So, and I guess where the family accumulates their wealth depends a lot geographically where they are. New York is real estate.
Yeah.
I know there's a San Diego office. Would that be biotech?
There's a lot of biotech.
Okay.
San Francisco's a lot. Now, that's not exclusive, but there is a lot. There are kind of general themes where families have generated their wealth. Dallas and Houston are typically oil and gas, et cetera, et cetera.
Okay.
So,
now, have they built their wealth through their own companies? And do they sell the companies and then they have money to use? Or what's your typical family like?
well, I would say it's kind of split in two. So we have a number of, let's just call them old line families that are third, fourth, or fifth generation. And those families could have been one of the original automobile families, or one of the original, let's say, Standard Oil families. And then you have newer families that have created wealth in 1,000 different ways. I mean, in our network, we have families that have created substantial wealth, and they made all their money in the grocery business, or in shipping, or in alternative energy. So it can vary quite widely, and it's funny because one thing that has made the families successful is they've been myopically focused on their core business.
Okay.
And a real reason why they want to open up the family office is so that they can now see other opportunities out there from other families, either in or in other regions around the country.
I'm sure to build a $100 million business, you would need to be very focused and very much know the ins and outs and the data of whatever industry you're in, and they've not known about all these other opportunities that are going on around them.
Yeah, that's very true. And one thing that's interesting is a number of the families know so much about their core business, but they haven't really been exposed to other industries and even other financial instruments. And so there's a great opportunity for strong advisors to get involved with families and really build a relationship and really help them.
Now, what kind of opportunities do you present to these families?
So we're hoping in 2016 that 50% of the transactions and opportunities that we bring to the families are generated from other family offices. Okay, that's our goal.
Okay.
And as I said, the reason for that is, for instance, if you have a family and let's say they're window manufacturers, or let's say they're in the construction space, because they are such experts in that area, nobody is more qualified to bring a fully vetted opportunity for investment to another family than this family that's been, possibly in this industry for 100 years. And so a lot of what we bring to the other family offices are one-off transactions, either sponsored by the family or non-sponsored. We'll bring them different alternative assets, maybe real estate opportunities. It could be a private equity opportunity. It could be a hedge fund opportunity. So, there are a number of different ways. And then, we also like to bring them top-tier service providers. Our mantra is we want to include not only family offices in our ecosystem, but, service providers that are high quality and can bring opportunities to families as well.
So these would be what, like attorneys or accountants?
Legal, auditors. It could even be prime brokers. But what we have found, look, I have been an investor myself for well over 20 years, and if I look back, it's amazing kind of where some of my best investments have come from. And a lot of times they come from service providers that you might not normally pay attention to. But if there's an accountant and he happens to have a connection into Silicon Valley for whatever reason, it could be one of the best opportunities out there.
Interesting. And they may be in a position where they can see opportunities that you wouldn't have seen otherwise. They consult for a company that does this or that, and they can say, hey, take a look at this.
It also, I think, helps people kind of not miss the forest for the trees.
Sure.
And I think having service providers, private bankers, whatever it might be, in the ecosystem really helps families kind of get outside themselves. And listen, a large part of what they're trying to do is diversify, so it's quite helpful.
So how many family offices are there in the U.S.?
About 5,000. There's about 5,000 in the U.S.
5,000 families.
5,000 families that basically have wealth north of 100 million and are actually organized in a true family office.
Okay.
And then there's 5,000 internationally. So we deal with a lot of international families as well. We have, for every one of our geographies, right now we have 22 geographies. So we're, for instance, on the East Coast, we're in Miami, Naples, Palm Beach, Washington, D.C., New York, Connecticut, and Boston, okay? So every one of those regions has its own website, and all our websites are tagged and banded, and what it really does is it's almost like an intranet within the internet, and it brings in a ton of international families. So we recently got contacted by the largest family office in Italy. And they came to us and they said, look, we really love what you're doing. We would love to be part of this kind of transaction flow. Can we open up the Rome Family Office Association? So, that's a perfect opportunity. It's fantastic.
Sure. And then I know you have events, cocktail parties, lunches, things like that. What kind of events could somebody expect if they're a part of this?
Yeah. So our mix typically is half the time we just want to do mixers, bring families together in a relaxed environment where the family offices can get comfortable with each other, kind of share their intellectual capital, get comfortable with each other in the context of co-investing. The other half of the time we're education focused. So some of the seminars that we have coming up are family offices launching hedge funds. We're doing that in conjunction with Bloomberg. We're doing one about portfolio managers launching family offices. Next week we're doing in Palm Beach family offices that are involved in private equity and all the issues that they need to think about and consider prior to either investing in a private equity fund or getting involved in a one-off transaction. So things of that nature.
Okay. Now if somebody is interested in being a part of this, how do they go about doing that?
So they can register with our site, and then they'll go through kind of a small interview process. We'll really spend time trying to understand what's the family's goals, what stage are they in regards to the maturity of their family office. Some families come to us and they haven't established a family office yet, so we'll help them actually open up and put all the pieces in place in order to establish their family offices. And other families are completely mature and they're just transaction or deal flow focused.
Okay. Now, do you ever find that some of these families maybe will invest in a company that is close to their heart? Like maybe a family member died of colon cancer or something. And so they'll be looking at a biotech company, for example.
Yes,
something
all
like
the
that.
time.
Okay.
Well, one thing we didn't talk about is we do a lot for philanthropy.
Okay.
And so, we support pediatric cancer charities, we support neurology centers that are doing research on Alzheimer's and things of this nature. And so absolutely, if there's, what you'll find, there's just kind of a natural flow. If a family member has been afflicted by, some disease, a lot of times in their research, in figuring out the best way to cure that disease, they will find companies that they think are interested in, and they'll bring it to other families. Sure. Absolutely.
Okay. Anything else you'd like to add?
Listen, what's interesting about family offices is that they are in the process of becoming institutionalized. And I think there has been a long dearth of instruments out there in order to help families and in order to kind of bring families so that they're treated more like professional pools of capital. And I think we're kind of in the second inning of that, but more and more from the wirehouses all the way down to data companies and just regular technology companies. There are a number of tools and pieces that are being put in place to help families really take advantage of their organization, their family office, and leverage it.
Okay. Thank you so much, Steve.
Yeah, thank you.
Everyone works hard for a reason. Working together, we can help you prepare financially for when 2 becomes 3. Wells Fargo. Together we'll go far.
You want to be the best investor you can be. You want to cut through the noise of an overwhelming amount of analysis. You want the insights that will help you decide which ideas to execute and which to leave behind. You want your trades executed in 1 second or less, guaranteed and routed with institutional quality technology. Look no further. Open an account and find more of the expertise you need to be a better investor.
When I got the phone call that we had received the grant, I held my breath.
To have a program like this is a big reward.
Being a Chase Mission Main Street grant recipient is a game changer.
One of the biggest surprises in starting a small business is the number of hours we should work for the first 20 years.
One of the great things about this grant is that it is going to let us invest in some additional inventories.
It's going to allow this business to go to the next level.
Being a recipient of this grant, we can't be thankful enough.
It's a dream come true, and I'm still in awe.
Lots of activity in today's buy, sell, hold action. Raptor Pharmaceuticals raised to a buy at Citi. First Merit was raised to market perform at Raymond James. Haverty Furniture cut to sector weight at KeyBank. Horizon Tech was cut to market perform at Raymond James. Imperva raised to market perform at JMP Securities. Metaldyne cut to neutral at Baird. Ocean Rig was cut to a sell at Nordea. Pier 1 Imports cut to sector weight at KeyBank. And Terex cut to neutral at JPMorgan. Thanks for joining us for Small Cap Nation, and we'll see you back here tomorrow. Until then, check back for the latest news and research on smallcapnation.com, Facebook, and Twitter.